Hello, and welcome to another update video about ADA. ADA only at 29.5 cents at the moment, and it seems to have been the right decision to start to focus more and more on this Elliott wave triangle, because that is how the price seems to be moving at the moment according to a triangle. For anybody who's new to this channel, what we're watching for here is ongoing sideways action on the ADA chart, constrained by potentially trend lines, but certainly Fibonacci levels in a sideways action. So I'm currently counting a third wave to the downside complete in December 22, 3 waves up in a so-called A wave, 3 waves down in a B wave, 3 waves up in a C wave. We could now be working on the 3 waves down in a D wave, 3 waves up in an E wave, and then we could get that one more low in this bear market that ADA might need, because ADA hasn't provided us with any impulsive price action to the upside for a long time, like many altcoins, however. Now, the thing is, I already gave you, I think it was last week, a couple of weeks ago, the target area for this D wave. I mean, we've nearly approached it, we've nearly arrived there. This target area starts at 28.5 cents. How did we determine that? Well, in a triangle, what you can do, you take the length of the, in this case, B wave, and we compare that to the length of the D wave. And as you can see, you can get exactly these Fibonacci ratios between the 38.2 Fib extension, 28.8 cents, and the 61.8 extension. This is an ideal target range for the D wave. Where do we land exactly? Well, that will determine on numerous factors, support, Fibonacci extensions on lower time frames, so we can take a look at that. Yesterday we talked about potential micro counts here. I warned you that micro counts, if we deal with corrections, they are always unreliable, and we need to be careful that they can change, because we're dealing with micro counts in a correction, which in itself is already choppy. So you have to expect frequent count changes. So don't treat corrective wave counts, especially micro counts in a correction, as predictive. We can see here that one of these supports already got invalidated. So let's just make the necessary adjustments. What I highlighted to you yesterday was that either we're dealing here with this triangle highlighted in white. Now that broke down too far. I don't think we deal with the triangle anymore. So it is more likely a direct breakdown. Yeah? That's how I had it initially. Had the B wave here, and the C wave down seems to be unfolding right now. Let's see if we get to the target area. But what I had here is an A wave down, a B wave up, and we could be following through in the C wave as an ending diagonal now. I think this is probably the more likely pathway, where we had here potentially a wave. Let me see, a wave 1, then a wave 2, and an A, B, C structure potentially in the third wave. This could have been a 4, and we could be moving down in a 5th wave now. If you're asking why it is so choppy, well, ending diagonals we're looking for 3 wave structures in ending diagonals, okay? So we have an ABC structure in wave 1, in wave 2, the wave 3 is often a bit more of a complex one, ABC, then the wave 4, also corrective, in this case short, and then the wave 5 would also be an ABC structure most likely. But that's sort of how I can, let's say, see it right now, because we seem to have lost structural support. And I wouldn't be surprised to get to that 28.8 cent level already. In one of the previous videos, I gave you a key level, because if we take a look at the length of the A wave, we go to the high of the B wave, then the 1-to-1 ratio is a key target here. It would take us to around about 25.5 cents. So while generally the yellow box is the relevant target area and turnaround point for the D wave into an E wave, it is the 1-to-1 ratio that could provide some additional support, as well as the 61.8 extension. 28.4 cents. Yeah. Pay attention to these levels. Let's see if we react to them. But certainly, this is the scenario that I'm following right now, and it would indicate that we deal with more ongoing choppy price action for many more weeks to come. If we see an impulse into any direction, it will be easier for us to determine where we actually are. So at the moment, we need to take this with a pinch of salt. I don't see any reliable trade setup really here on the chart. This here is the target area, just target area really. I would personally not buy to trade an E wave. Some of you might want to. I don't. I find it low probability, because we are in a corrective price structure. Yeah, I would expect a bounce in this region, but How high will it be? That is in an E-wave hard to determine. If you look at this proportionally, it's not the best reward to risk ratio either. So yeah, I would just be a bit careful here. And until we get a first impulse to the upside followed by a 3-wave pullback, we just don't have a really good trade setup here on this chart. That's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.